Before we talk about tech, I just want to get your philosophy out, or your ethos. Buy on hopes and news, sell on facts and results. That's what you think the Chinese market's going to do. That doesn't sound very optimistic, Winnie.
We are not very optimistic right now, despite we know there's high market expectations, right? From second half last year, we heard, year-end rally, we heard first quarter rally, which hasn't played out yet. We think, this year, fundamentally, the market is going to be torn between the two conflicting forces. You got the more stimulative and supportive policies on the one side, which give people hope to buy. But on the other side, fundamental economy and corporate earnings are likely to continue to deteriorate in the next 6-12 months, and that's not going to be good to bode well for the market.
So what are you advising your clients then?
Yeah, we think this year there's probably still better opportunity in the mid-small cap sectors and in the Asia market. Because if you look at MSCI China Index and H-share market, they are very concentrated in the internet sector, which account for over 30% of the indices. And the internet sector now, in our view, could be facing the similar challenge of the China banks 10 years ago and China telcos 20 years ago, in the sense that with increased government policy intervention, they could see prolonged deceleration in earnings growth and long-term structural derating. So if internet sector can't perform, it's very hard for those indices to perform. Whereas on the Asia market, there are more real economy sectors, right? Consumer, materials, industrials, IT-related sector, which are more aligned to policy direction, and many of the mid-small cap stocks could be better positioned to enjoy policy tailwinds. So instead of trying to guess, the policy turning point and trade the bounces in the indices, we advise investors to focus on the fundamentals and find those good sectors, good companies that can have secular growth.
And what are those sectors in particular, Winnie?
Yeah, in our view, it's mainly two industry clusters, right? One is the green economy related sector. So that's the EV batteries, renewable energies, new materials. And the second industry cluster are the so-called little giants in those advanced manufacturing sectors. They are mainly in materials, industrials, IT sectors. We think they are aligned to China's policy priority of technological upgrade and self-reliance, and they are consistent with the global trend of decarbonization.
NPC is coming up. One of the investment strategies that so far has been largely bulletproof is align your portfolio with policy priority of Beijing. What do you think are the sectors that are going to come under favor after the NPC?
Yeah. I think, like you said, align the portfolio with the policy priority and, take a 3-5 year view. We think, green economy, little giant are actually aligned to China's policy priority in terms of technological upgrade, self-reliance, dual circulation. In the near term, people certainly have high expectations on easing, which might be supportive on the property sector. But in our view, any easing on the property is more likely to be aiming for providing a floor on economic activities rather than to stimulate the property price or bail out individual developers. So property sector, we think any easing is more likely to be gradual, marginal, and supportive more of the large, healthy developers, whereas the default risk, event risk may continue to exist for some of the high-yield issuer, private, high-risk developers. So we wouldn't bet too much on a strong stimulus to favoring the rebound of property material sectors.
You mentioned about tech. I'm just wondering, have your views changed in any way since maybe early this week when we heard, all these kind of different forms of regulations that are back? It seems for many of us that thought this was the worst, is behind us right now. Does it prompt a sort of re-rating of Chinese tech once again?
Yeah. So on the tech side, I think we want to clarify whether we're talking about the hard tech, like the semi-hardware, software, or the internet sectors, right? Our view is that internet sectors will probably still enter long-term policy intervention. Earlier this week, we see more negative news, right? And I think the focus on antitrust, on cybersecurity, data security reviews will continue to be the focus. And in fact, for internet, the risk might shift from policy risk to earnings risk in the next 1 to 2 years as these policies start to constrain their operations and operating margins. Whereas for the more hardcore technology like the semiconductor, the hardware side, we think they are aligned to China's policy priority and will be better positioned.